Manoj, let's kick off, of course, with Bernanke's comments and the impact that that's had on the market. It seems that the optimism has somewhat faded, but of course we did see that boost to the risk rally that we saw yesterday. And what were your thoughts on the comments from Bernanke and the implications that this has for assets across the board?
Bernanke is looking at the US economy as a whole and realizing that, okay, it's back on the path to recovery, but the recovery is still fairly fragile. If we look at various aspects of the recovery, the unemployment, that's started to creep back down. That's around about 8.3% at the moment, back down from the highs just above 9%. So that's a positive. But then if you look at retail sales, that has just started to creep up, and home sales are still struggling at the moment. House prices only out today are very much in depressed territory, and until all three parts of the industry start to move up in a strong fashion for a sustained period of time, the US recovery is still fairly fragile. And this is what Ben Bernanke is looking at in order to determine whether to embark on another round of quantitative easing or not. And it's not a question of if, it's a question of when, and I think it'll happen some point this year, and it could happen sooner rather than later.
So basically markets looking at a further round of quantitative easing, and that's seen as a positive for risky assets.
Well, absolutely. We're in the current interest rate environment, whereby you have central banks setting interest rates at close to zero, and with inflation, real interest rates are sub-zero. There's very few places for investors to park their money, and if corporates are doing well, they have plenty of cash on their balance sheets, and they're paying out a dividend, and those companies are growing, or seem to be growing, certainly from a low base, then investors are going to park their money there. But also, on the other hand, it pays to play safely at the moment, and that's why gold seems to be the asset of choice. And although it's trading around about $1,700 at the moment, just beneath, there does seem to be demand at current levels, and I wouldn't be surprised if there is another round of quantitative easing, then gold pushing back up to the highs, or surpassing the highs that we saw in recent months.
So you're looking at that being a positive for gold, of course. Just let's focus in on Europe today and some of the key numbers that we're tracking. UniCredit came out with results and beating expectations. What are your thoughts on those numbers, and what does that indicate about the financial sector right now and the areas that bank's exposed to?
Well, looking at UniCredit's numbers and looking at the banking industry across Europe as a whole, it seems like the worst seems to be out of the way. They've written off, UniCredit, for example, wrote off a large amount of debt in its third quarter, certainly a large amount of Greek sovereign debt, and various write-downs as well. So that they seem to have gotten rid of the worst aspects of the banking industry that had been holding back the European banking industry for the last few years now. So it looks like the worst is out of the way, and it looks like it could be onwards and upwards for UniCredit. They're not paying a dividend, but then that's hardly, that's perfectly understandable, because this is a company that still is very much in recovery mode, and with Tier 1 capital at just beneath 10%, it needs to bolster the balance sheet before it's back fully on the recovery path.
In the meantime, we saw RBS's share rallying today, and that's on speculation that Abu Dhabi investors could be buying a stake or government stake in the bank. Is that a likely possibility, and what would that mean for the financial system right now in the UK, where you have United Arab Emirates investors having a greater participation in the financial system in Europe?
Well, we've got to remember that RBS also purchased ABN AMRO at the height of the banking crisis as well, back in 2008. So the UAE purchasing these assets, or a large amount of these assets from the UK government, and buying into RBS, and not necessarily buying just RBS's assets, they're also buying assets across Europe as well. But it'd be a positive for RBS, because RBS has been trying to offload these assets for a while now. The UK government has an 82% stake in RBS, which is it is desperate to offload. But if it offloads at current prices, it will realise a loss. The average price for the UK government is around about 50 pence. RBS is trading almost 50% beneath that. So it'd realise a loss, but it'd be a strong positive for RBS, because then the bank can get back on the path to proper banking.
In the meantime, Italy's bond auction was successful today. Italy announcing it sold 3.82 billion euros of zero coupon inflation-linked bonds. That was 1.9% oversubscribed. What is your view on the fact that we had yields coming down on the back of that and the implications around confidence in the Italian economy right now?
Well, I think confidence certainly seems to be returning into the Italian economy. The demand for Italian bonds seems to be certainly firm, and 10-year yields, for instance, have come down quite considerably from those highs that we saw a few months ago. And let's not forget that the Italian economy is somewhat different to other economies across Europe, and certainly very different to the Greek economy in that it is more developed. It does have an export economy, and it is a lot more robust than other economies. So this is a positive for Italy, and it's a positive for Europe as well.